The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Octavio Marenzi from Opimas. Good morning, Octavio.
Good morning. Good to be with you again.
So the Bitcoin price is a little bit down off of it was just recently crossed $50,000 for the first time in 3 months. Can you just tell us a little bit about your short-term outlook? So there's been a lot of talk about how we're in summer doldrums, it's a bear market. Have we finally broken out of that, or do you expect sort of Bitcoin to go down again?
Well, I'm not. I mean, in terms of short-term movements, it's so hard to say. You know, a 5% or even a 10% movement in Bitcoin or other cryptocurrencies is just par for the course. That's just what you have to accept in terms of the volatility in this asset class. So I don't know exactly short-term what's going to happen, but I think longer-term, to sort of hit the nail on the head in terms of the discussion of the Fed and what they do and what they don't do. I think that's going to be the underlying driving force in this, and I think their things look very, very positive. So we're not back to the highs that we saw back in April, about 64,000 on Bitcoin, so we're well below that. But it's been encouraging the past few weeks, and I think the real impetus to that has been the big infrastructure bill and the budget bill that's passed through the House, calling for spending about $3.5 trillion. And of course, a lot of that debt is going to have to be monetized, or a lot of that budget is going to be in deficit and will have to be monetized. And I think that will be very positive and an underpinning for Bitcoin and other cryptocurrencies.
Octavio, as we discussed just a few moments ago, do the macroeconomic fundamentals really matter right now, specifically to the Bitcoin market, when you have other things happening, movements and people buying and selling at a off market and in the OTC market, and things just moving around in general because of regulatory aspects to, let's say, Binance, et cetera, that's affecting Bitcoin price a lot more than, let's say, macro. Is that not the case, or you disagree?
Oh, I agree with you. I mean, there's a lot of factors driving it, right? You're absolutely right. The regulatory side, what's happening to Binance, I think the IRS coming out with stricter rules, all sorts of things might happen. The Treasury is looking at it very carefully. So there's all sorts of regulatory rules. But I think that sort of noise around an underlying trend. I think the underlying trend is up. And then the regulatory aspects of it go up and down and seem to change day by day almost. And there we'll see some volatility and changes day to day. But I think if you look at the space sort of fundamentally, there's, I think, two different aspects of it. There's sort of the cryptocurrency / Bitcoin area. I mean, Ethereum you can count in there as well. And then the other side of it is really sort of the blockchain technology, which has raised a lot of interest in all sorts of different areas. I think with some disappointment so far. I think a lot of people were expecting everything to be on a blockchain at this stage and the whole payment system to be there and the stock markets and everything. That really hasn't come to fruition, but I think the potential is still there to do something very interesting. And that, of course, is very positive for something like Ethereum, which is the biggest provider and underlying technology for blockchain. So I think those two things are quite encouraging overall. I mean, the regulatory side is a cloud on the horizon, but I think the future looks good. So I don't know what happens short term. I don't make short term guesses on these markets, but I think in the medium term or long term, things look pretty positive.
Octavio, we have a meeting this Friday with the Fed. Fed Chair Jerome Powell is expected to make some comments. Anything that we should be looking out for? Anything he might say that could have an impact on the crypto market?
Well, he could say a lot of things that would have a very profound impact, but I don't think he will. So I think what's probably going to happen, he's going to come out of the meeting in Jackson Hole and waffle. And he's going to say something will be in the markets for as long as it takes and will pursue the right policy at the right time. And ultimately, he won't have said anything at all. So I think that's what's going to come out. Just a couple of weeks ago, I would have sort of bet more that they were going to start to taper their bond purchases. I mean, bear in mind, they're buying $120 billion a month worth of bonds, 80 billion of treasury bonds and 40 billion of mortgage-backed securities, which is a huge influx into the markets. And cryptocurrencies have been benefiting from that a lot. Now, if you were to come out and say, we're tapering down, we're going to increase interest rates, we're going to stop our bond purchase altogether, I think that would be a pretty negative thing for the crypto markets overall. But he's very unlikely to do that. And I think the balance of the risks has changed, where now he's basically saying, well, we've got the Delta variant coming up. We've got a good excuse to carry on printing money on that front. We've got this enormous budget making its way through the Congress that's going to have to be financed in some way. I don't think the Treasury or the Biden administration is going to be very happy about higher interest rates. I mean, the Treasury is sort of at the breaking point in terms of paying interest on the current government debt. If that goes up a bit, that could be very, very negative indeed. So there's tremendous pressure on the Fed to just stay the course and carry on buying bonds and printing money to do that. And that, of course, is very favorable for crypto. Now, I don't think he'll change that. I don't think he'll say anything definitive or definite in either direction. I think he'll just sort of try and kick the can down the road a bit further. And like I said, a couple of weeks ago, I would have bet in the opposite direction that they're actually going to start to taper, but I don't think that's going to happen now.
So we see, of course, the S&P 500 is near 52-week, actually all-time highs. Is that expressing itself? Is that the market's willingness to take on risk expressing itself that way, or are equities and crypto both expressing concerns or at least a reflection of what the Fed and what our monetary policy is? So, in other words, are we looking at a just basic? Yeah.
Yeah, no. I think exactly how I see it. I know you disagree slightly on whether the Fed is going to make a move one direction or not, but I think that is really what's underpinning the stock market and the crypto markets as well. So it's all this money printing, all this liquidity being pumped into the markets on a monthly basis is supporting the prices there, and that's what's underpinning certainly the stock markets. And the stock markets have also looked at this budget now and said, okay, well, that means the Fed is going to carry on printing money. There's no way around it. They can't get around that, really. They're going to have to do that. There's no other way to finance this. So that is it. I wouldn't say it's positive for the stock market. It's basically negative for the dollar. So the smart thing seems to be increasingly to get out of the dollar into anything else. So anything that's not a dollar but is denominated in dollars starts to look very attractive and is going to go up through the roof.
Octavio, I understand that you also give advice to the financial industry. Can you tell us what kind of advice you're giving right now, specifically as regards crypto, or what kind of advice you would give as regards crypto?
Well, we've given a lot of advice around infrastructure aspects of cryptocurrencies and blockchain and things of that sort. So people have come to us for advice on how to deploy crypto custody solutions, like how should we actually make this work to make sure that the Bitcoin that we hold is safe. That's still an area where a lot of firms have some big problems. We've talked to a lot of the exchanges and worked for some of the big exchanges in terms of market data on crypto and what they can do with that and how they can monetize it. So we engage on areas like that. So those are the kinds of things and projects we engage on with our clients in the crypto space. In terms of actual sort of investment strategies, I think we're basically saying we think it looks pretty good and a certain portion of the portfolio should be allocated towards Bitcoin and crypto. I think one of the things that surprised us a bit is that something like gold has not benefited from the upswing that cryptos have, and that's been basically what seems to have happened is Bitcoin has displaced gold as the inflation hedge of preference, and so that's been an interesting evolution to see over the course of the past year or two.
So getting back on that issue though about gold versus Bitcoin, and the fundamentals behind, let's say, Bitcoin and crypto, is gold really? Has it really displaced crypto, or is it actually telling us more about the future projections of inflation than crypto is, and that crypto is just sort of moving because of the way those market fundamentals, and that maybe we should be paying more attention to gold if we're going to talk about the market's future their anticipated view of inflation? In other words, is gold really telling the picture, in fact, and crypto is sort of like a loud noise?
Well, I guess, yes, crypto is a bit of a loud noise, but I think it's an important directional indicator as well. And the markets overall, I think, are also a very strong indicator. I don't think it's even a question now of speculating about future inflation. I think it's here. I mean, we see fairly strong price increases year on year coming out, even on the consumer goods level. So CPI is going up and up. And I think that's going to continue. So it's not even a question, I think, of saying the markets are anticipating inflation. I think the inflation is here and it is quite clearly here. So the question then becomes, why has gold not come up and gone up with that? Because traditionally it would have. And I think the major reason there is that we simply don't see people investing money in gold to hedge against inflation anymore. It's also interesting because gold typically benefits also from any sort of geopolitical uncertainty. And we've seen that in spades over the course of the past few weeks, and it hasn't budged that much. So usually when there's some unpleasantness in some part of the world, the gold price pops up. That hasn't happened this time around either. So it seems that gold as a hedge against geopolitical instability and against inflation has sort of been knocked off its perch.